Hello, this is George, and this is my first video in a long time. I wanted to start including some educational videos for my last book in the Easing into Easy Language series. This one is the DayTrade Edition, as you can see on the screen, and this will be from tutorial number 2. You'll get all the tutorials in the book and all the source code, of course, but I wanted to go ahead and demonstrate what's in the book. And also, I've had people ask me, several questions about each tutorial. So I think over the next couple of weeks, I'm going to start creating a video for each tutorial that's in the book. And I wanted to jump into number 2 because number 1 is quite easy. Number 2 just adds a little bit of complexity to the trading algorithm and also the indicator that's in that tutorial. Before I do that, let's jump on to the disclaimer real quick. Basically, this states that TradeStation, EasyLanguage, and PyReditor are registered trademarks of TradeStation Technologies, and I'm going to be showing some equity curves and performance metrics. So let's go ahead and look at the CFTC required risk disclosure for hypothetical results. Go ahead and read this over. I'll give you a few seconds. Basically, I'm just showing you the limitations of using hypothetical back-tested numbers. Okay, I assume you've read that and understand it. And if you proceed listening to this video, then again, I assume that you understand exactly what I'm saying in that. So let's get rid of that. Let's go ahead and jump into the equity curve here for this simple day trading strategy on the ES.D. This is the day session of the E-mini S&P 500. It trades quite frequently. As you can see, over the past 10 years or so, it's traded 500 times. It's 50 trades a year. This strategy is using an open range breakout. It can only buy on particular days and can only sell short on particular days. It can't do both. And there's a filter in there. There's basically 2 filters. It can only trade after range compression, and it can only trade in the direction of the 39-day moving average. So the close of the prior day has to be above the 39-day moving average before you can buy, and the opposite is true for selling short. It's got to be below the 39-day moving average. So let's jump into that real quick. There's the equity curve, like I said. Performance summary, 44,000. Average trades only $89. So this is something that you can play around with. This is a template. So when you buy the book, I would always download each ELD, the workspace, and then when you want to start applying different programming to each template or framework, save it as a different one. Save it as your own, and then you always have your fresh copy you can go back to if you have to. And this, of course, is using also a protective stop and a profit objective. So that's the code. That's the performance. Let's look at the chart real quick. In August, we've had this down move in the stock market, and so we've been able to capture a few trades on the short side. That was a loser. This is a winner, and there's another winner there. So as you can see, the market opens here, and then it moves down to our breakout level, and you can sell short. And this is a big winning day. It didn't take a profit, but it had a nice trade by the end of the day. It does the same thing. There's another short. There's a buy breakout. Looked like it was going to be. It didn't take the short. Didn't take the short because the sell short filter was not kicked in. It had the buy only filter kicked in. So it did buy this, which was probably not a good idea. It had a nice move after it broke out, but of course it fell completely. It fell apart completely, and you got stopped out. So it's not the holy grail by any stretch of the imagination, but the coding in it is pretty cool. As you can see, I got an indicator that tells you when the day opens where you'll buy and where you will sell short. But the indicator is only plotted after a certain time period, and that's another constraint. I'm using time constraints. I only want to trade certain period of the day, the heart of the day. And let's jump into the code real quick, and I'll show you how that works. Okay. This is a simple open range breakout. Long and short, trade in the direction of a breakout, maximum of 1 long and 1 short entry, meaning you can only go long once during the day, or you can only go short once in the day. And we're going to use a profit objective and a protective stop. Data 1 is a 5-minute bar. Data 2 is a daily bar. We're going to be working with data 2 and the time and time constraints and filtering. And that's what the whole objective of this tutorial is to explain those concepts, working with data 2 and time constraints and filtering. So basically you have several inputs. You don't want to trade before 10 a.m. You don't want to trade after 15:30. That's 3:30 p.m. and that's Eastern. I'm going to use a profit objective. I got $1,000 in the template, but as you will see in the actual chart, it's a little different. Stop loss the same. It's 500 in the template, a little different in the chart. Percentage range breakout is 40. My range calculation is 20. My ATR calculin is 10. My ATR mult is 1. Now, the range calculin is the amount of the range of the 20-day range, average range, that I'll be buying above the opening and selling short below the opening. So I take the range calc lin and calculate the average range, and then I multiply it by the percent range breakout. In this case, it's 40%. So I place a 40% level above the market, and I place a 40% of the average range below the market open. And I should have said open in the first. So you'll see two levels above and below the open. So let's jump on top of this. I start out with daily calculations just once a day. If today's date is not equal to the prior bar's date, then we know it's the first bar of the day. Okay, so if if the date of the current bar is not equal to the date of the prior bar, then you know you're on the first bar of the day. And this only works with .d data. So at ESD.d, NQ.d, TF.d, things like that. So what are we going to do on the first bar of the day? Well, let's go ahead and get rid of all of our daily bar calculations. Let's do the average range, which is what will be used to calculate our buy and sell short levels. ATR is the average true range of data 2, and what that will be doing is determining if we have range compression, and that is what filter 1 is. Originally in the book, I got filter 1 equal to true range of data 2 equals the lowest true range of data 2 4. You may recognize that as an NR4, Toby Crable's NR4. I wanted it to trade more often for this tutorial or this video tutorial, so I went ahead and just basically stated filter 1 equals true range of data 2 is less than the average true range times the ATR mult. And you can optimize the ATR mult or the ATR length. This is, again, a framework. You have a lot of things you can optimize if you like, just to get your, you don't want to overcurve it, but you want to get inside the ballpark. Filter 2 is basically going to say, okay, it's going to be true if the close of data 2 is above the moving average of data 2 for the last 39 periods. So basically, the close of data 2 is greater than the 39 period moving average of the close of data 2. Filter 3 is going to be the opposite of filter 2. So if filter 2 is true, filter 3 is going to be false. So this says I'm above the moving average, and this will say you're not below the moving average. Okay, so filter 3 is the negation of filter 2, and you can do that by using the not function. That might be new to you. Okay, I keep track of my total trades. I won't go into detail why I'm doing that. That's really revealed in the book. My short entry level is the open of the day, open D 0 minus percentage range breakout, which is 0.4 times the average range. My buy entry is the opposite. I'm just adding that percentage range breakout times the average range to the open. Can buy and can short are two conditions that I set to true on every day. Every day I go in until I can determine if I cannot buy or if I cannot short. I'll set these to true initially, and then I'll set them to false subsequently. I keep track of market position. If the time is greater than my don't trade before time, meaning my timestamp is 10 or greater, 10, 10:05, 10:10, 10:15, blah, 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 and my time has got to be less than 15:30. So I can trade up till 15:25. I can take a trade on the 15:25 timestamp. And filter 1. Filter 1 is a conditional. It's either true or false. It's a Boolean. So filter 1 is, what is filter 1? Well, that's the compression. If my true range of yesterday is less than the average true range times the ATR mult, filter 1 will be set to true. If it's not, it will be set to false. So if filter 1 is true, then I'll go ahead and I fit the time constraints. I'll go ahead and start thinking about taking a trade. If MP equals 0, that's flat, if you're flat. And I won't go into detail what this code is doing, but what this is doing is it's forcing TradeStation to issue proper stop orders. If you're not careful when you're doing a back test, you can buy at a much higher level than your buy stop. TradeStation allows you to do that. In this case, what I'm doing is I am forcing the close to be below my stop order of the current bar. Meaning, I don't want to, if the current bar's close is above my stop order, I don't want to throw an stop order out there because it'll be filled immediately on the open and on a back test. And in real-time trading, if you automate this, it will be rejected. So what I do is if I say if the close is greater than my buy entry level, because remember I'm waiting 30 minutes, the market could move through my buy level, I don't want to buy that, okay? Because A, I don't want to buy at a much worse price on a historical backtest, and B, it will not work in automation. So I turn can buy to false. Same thing for can short. Okay, I won't go into this. This is a really neat code here. All this is really is accounting that takes place to help you keep track of accurate entries and exits during the day. TradeStation provides some tools like entries today and things like that. It will not work 100% of the time, and in the book I go into detail why it doesn't work. So you have to kind of do some tricks and some code, and that's what's really key about this book. I give you all that in the book. How you can do this accurately. Okay, I got some debug code in there. If buy entries equals 0, okay, I set that equal to 0 in the first part of the day, and I can buy and filter 2, which means I'm above the moving average, and the current bar is less than the buy entry level, which means I can buy at a accurate stop level. And that might be redundant because I got can buy in there as well. So this may be redundant. I'm not sure. I had to play around with it. But anyways, basically I'm saying I'm going to issue a valid stop order. I'm not going to issue an order that's not valid. I'm going to buy on an Orbo buy, next bar at buy entry level on a stop. Selling short, no short entries today, and I can short and filter 3, which means I'm below the 39-day moving average, and my close is above my short entry level. I'm issuing a valid sell short stop. It's got to be below the market. Then I sell short at that level. I set the stop loss to whatever is in the input, and a profit to target to whatever is in the input, and then I set exit on close. Now, set exit on close will not work on automation. And I do talk about that as well, how you can convert the set exit on close to get you out, the open of the last bar prior to the end of the day. But for backtesting and for this tutorial, set exit on close will be fine. So that is basically the strategy as you saw on the charts. Here's the indicator. Basically, it follows. What I like to do is when I'm creating what I call a system tracking indicator, I want to plot the buy and short levels of where I will be buying and selling short on the chart. I basically copy the strategy code and I paste it into a indicator code, and basically I do the same thing. Here's all my inputs. Don't need as many because I only need to know the levels I'll be buying and selling short at, and then I plot the buy level and the sell short level, but I only do it after I can trade. So that's the reason you see that little space there at the beginning of the chart. I'll show it to you again. You got this space right here. I don't start plotting until I can start trading. So that's what's in this book. So I hope this has been beneficial. Email me with any questions at george.p.pruitt@gmail.com or check out my website at georgepruitt.com. And I thank you. Have a great day.